Joining us, Mrs. Deepa Sachanandani from Century Financial. Welcome, ma'am, and thank you for joining us on CNBC Arabia. Starting with the performance of the market during this session, we are witnessing, of course, an interaction with the business results for the companies. How do you see, in general, this season for the second quarter?
So far,
especially that you are approaching the declaration of the first quarter.
So far, almost 50% of the companies have already reported, and out of those 50% companies that have reported their earnings, the ones that have reported have almost a 73% weightage in terms of market capitalization. So we've already seen a significant chunk of the earnings revealed, wherein most of the numbers have been really optimistic, especially be it MR properties or Aldar properties, or even as far as the utility sector is concerned. We were expecting stellar results from the utility sector, especially you have companies like Tabrid, Deva, or even Emirates Cooling. Most of them have reported revenue growth almost of 8 to 10%. And of course, we did see some companies report lower profitability, but those were one-offs. For example, Deva had a high depreciation charge to their income statement this quarter, which is why the profits were slightly on the lower side. But in general, the results have been really robust across different sectors, be it your financials, especially banks, or be it the real estate or the utility sectors, and even the industrial sector. In general, the results have been really optimistic.
Yes, however, Mrs. Deepa, with the second half of the year and with the increased expectations with a lower interest rate, how do you believe that this will affect the earnings of the banks and their profits, especially during the second half of the banks, while, of course, the real estate companies as well?
So as far as the banking sector is concerned, definitely when there is a cut in the earnings rate, in the interest rates, that is slightly going to hit the profitability and the revenue of the banking sector, because they realize a significant chunk of their revenue from the loans given. So a lower interest rate would definitely be a hit on the margins as well as the net income. But what happens is that we've been seeing stellar growth in UAE across different sectors. So in general, if the UAE GDP and the economy is growing, banking sector tends to benefit. For example, the population growth in Dubai, for that matter, has been growing significantly. Like in 2021 and 2022, we had a growth of on an average like 2%. In 2023, it jumped up to 3%, and this year in the first half, it's already up by 3%. So when you have the population growing significantly, automatically the banking sector will also benefit. So while we will obviously see some hit from lower interest rates, it could be balanced and stabilized by the massive demand that we'll be seeing from the growing population. As far as the real estate sector is concerned, that sector still seems to be doing really well and should probably continue to do well going forward. Again, one major factor would be the huge influx of people seen coming into the UAE. So that is a major positive. Apart from that, there has been a controlled supply as well as a huge demand from different areas of the world. Especially we've seen a robust demand from foreigners. So overall, the real estate sector also seems to be well supported, and with lower interest rates, it could also support mortgage growth further. So that should be a bigger positive for the real estate sector as well. But what we really need to keep an eye on is also how the global economy is performing. So if we witness a major slowdown in the US markets, then that could have ripple effects for the UAE markets as well, as we saw in the last week. But more or less for now, things do look very stable and steady for now.
Thank you very much, Mrs. Deepa, for joining us. It was a pleasure having you at CNBC. Thank you very much.
Thank you so much.